Alright guys, welcome to us to be on YouTube channel. If you are a new viewer, kindly subscribe to this channel and make sure you turn on notification because you are going to be getting more videos on how to trade the forex market right on this channel, because this channel is actually dedicated majorly for teaching how you can trade the forex market, guys. So that is just it. So ensure you subscribe and make sure you like the video, because at the end of this video you are going to have a reason to like this video, guys. So this video it's actually one among the many other videos I promised to make, right, to teach you guys ICT, institutional trading concept. That is the concept I used in my trading, right? That is the concept I used in my trading, and I can assure you that if you learn and master this concept, you have a good edge over the market. It's the truth. You are going to have a good edge over the market. So it's ICT is a bit technical, but I'll try as much as possible to break it down so you can understand it. I'll try to break it down even for a little baby to understand it, right? That is how I'm actually going to do my best, right? In that regard. So also do your best to make sure you watch every section of the video and take your biro, note every key point down. That is just what you have to do. I have done my part to make the video. You should do your part to watch the video and then understand it. Watch the video repeatedly until the video, everything sinks in, right? That is it. You have to watch it repeatedly until it sinks in. That is how it works, guys. So you don't just expect to watch it once and then you get everything. No, it doesn't work that way, right? You have to watch it over and over and over again. However, this very video is actually the basics of ICT, so you really don't have much to worry about on this video. Maybe on the subsequent videos, you are going to have kind of a bit new concepts, right? That's what you are going to be hearing about, and then you are going to learn them over time, right? It's not difficult. You are going to learn it. Just be ready. That's it, guys. So ICT has transformed a lot of life, and I'm going to teach you one of the challenges people are finding in ICT is understanding it. That is the truth, understanding it. If you understand ICT and master it, you are going to have a good edge over the market, right? You're going to have a good edge over the market. So without wasting much of our time, let's quickly dive into this video, guys. So on this very video, which is the first video, I'm going to teach you guys on price delivery, how the price is being delivered. I want you to understand that price does not just deliver, right? It does not just move. It moves in order to achieve a specific objective. Note down the word, it moves in order to achieve a specific objective, right? So that is one thing you should understand about the market first, right? So that is it. So understanding how price achieve its objective, that is what we are going to talk about on this video, guys. So let's quickly move on to the next slide, which is price delivery. Price moves strategically to achieve specific objectives, right? In the forex market, price delivery can occur through four distinct ways. Number one, consolidation. Number two, expansion. Number three, reversal. And then number four, retracement. You need to understand all these concepts, right? You need to understand the consolidating market. You need to know, okay, we're in an expansion market. You need to know, okay, we are in a reversal market condition. You need to know that we are in a retracement market condition. If you don't know all these things, what are you doing in the market? You should not be in the marketplace. So guys, make sure you watch this video to the end, right? So let's talk about consolidating market first, and then we move on to the others. So consolidating market, this is when price is moving within a defined range, right? This is it, within a defined range. So it actually indicates market indecision, right? Before potential breakout or continuation of the trend. That is just the truth. So it indicates that there are indecision between the buyers and the sellers at that particular moment, right? So that's what makes the market to consolidate, right? So that is it. So in such a case, you have to be very careful and watchful. Just sit down, relax, watch the market and allow it do its thing. Just allow it to expand before taking any decision, guys. So let's quickly take a look at an example of a consolidating market. So this is an example of a consolidating market. You can see how price was moving within a range. Within this range, price was just moving within this range. It could not take out the range, right? So this is an example of a consolidating market, guys. So consolidating market, I've explained what it is, and you have seen it practically what a consolidating market looks like. So let's quickly move on to the next one, which is an expansion, right? So this is when price moves quickly from a level of equilibrium or consolidation. You can regard equilibrium as consolidation. It's simply the same term, right? In this case. So when price leaves a level quickly, this indicates on the part of the market makers, which is the big boys in the market, to reveal their intended pricing model. That is it. So you have to take note and watch out. In such a case, you have to watch out for an order block theory in the market. The market makers left, right, or leaves near or at the level of equilibrium or consolidation, right? So immediately after seeing an expansion, right, you're going to see an example of an expansion now, or expanding market on the next slide. But before then, immediately you see an expansion, what you should watch out for the order block, right? What is an order block? I'm going to teach you an order block. If you happen to watch an order block, I'm going to teach you an order block on the later part of this course, right? So make sure you watch when we get to that part, right? However, order block is simply the last buy or sell candle before that expansion. So before that expansion happened, that last buy or the sell candle, right, depending on the market condition, so is the order block. And then what you should watch out for, outline your order block and wait for price to come back to the order block before taking your decision. However, there are other reference points you should make reference to, right, outside order block. So that's why you have to watch everything, right? Watch out for the next series of this the next video on this series, and then you are going to get it, right? So that is it, guys. So this is an example of an expansion market. You can see how price was consolidating, and then all of a sudden you see how price expanded to the downside. If you were not careful, you would think price will expand to the upside because it was even showing kind of a bit willingness to go higher. However, it was just consolidating. Indecision in the marketplace. Nothing. It was not going higher, it was not going lower. So in such a scenario, I told you guys to wait and wait for an expansion. So immediately after seeing an expansion, you outline your order block, right? So that is it, guys. That is it about expansion. So let's quickly talk about a reversal. Reversal. This is when price moves the opposite direction of the current direction, right? Price changes direction, shifting from an uptrend to a downtrend or vice versa. So if we are in an uptrend, price will change direction to a downtrend. So that is it. That is what reversal is all about. So when price reverses, it reverses direction, it indicates that the market maker, which is the big boss in the market, have run a level of stops and a significant move should unfold in the new direction. That is one thing you should understand. The way price moves is that it targets one liquidity pool, one level of liquidity pool, and to another level of liquidity pool, right? That is how price moves, right? So you need to understand, and don't worry, in the later section of this course you are going to know what liquidity pool is or are, right? So let's quickly move on. This is it. So as you can see right here, this is a point where liquidity is residing, and then this below right here is also a point where liquidity is residing. So you can see what happened. Really, market took her liquidity here, the market reversed to the downside to target the liquidity residing below this low, and right, and then immediately it took it out, market also reversed. That is it. That is it. That is how the market moves. The market does not just move, it moves to target a particular or to meet a particular objective. That is how the market moves, guys. That is how the market moves, right? Notice how price reversed after taking out the buy stops residing above the relative equal highs to target the next liquidity pool residing, right, the relative equal lows. That is it. That is it, guys. That is it, guys. So let's quickly talk about retracement, right? So this is when price moves back into a recently created range. Note, you are to look for internal range liquidity pool, right? So we are going to see that on this chart. So look at what happened. Price expanded, right? This was an expansion. Price expanded higher, and then you can see how price retraced into an internal range liquidity pool, right? Internal range liquidity, and then before it continued trading higher, guys. So this is what retracement, expansion, consolidation, and then reversal is all about. So if you enjoyed this video, kindly hit the subscribe button and don't forget to turn on notification so you get notified whenever I upload new videos. So also like this video. If you enjoyed it, please like the video, and you can drop on the comment section whatever topic you want me to make video on, guys. So thank you for watching.